You're welcome back to the program. If it's just joined us, you're watching Business Incorporated. We're coming to you from Channels Television Global Headquarters here in Lagos. We'll try to get in touch with Dolapo Oni, who is the head of energy research. Okay, we have Dolapo online right now. Yes, we'll talk about the global oil markets. Just before then, the International Energy Agency says that while oil prices have recovered remarkably in recent weeks, this should not be taken as a definitive sign that the worst is necessarily over. Now, according to the agency, in its latest monthly report published today, oil markets have seen a recovery in recent weeks on the back of a weaker dollar, which helps to fuel demand. Let's now bring in Dolapo at this point. He is the head of energy research at EcoBank Group. Dolapo, thank you so much for coming on the program.
Thank you for having me.
Okay. Do you agree with the IEA that oil prices have reached the lowest levels? Okay, we will try to get back to Dolapo in a bit as we'll take a look at what the oil markets will look like in the months to come. The IEA, just to remind the viewers that the IEA is saying that oil prices have recovered remarkably in the past few weeks. However, there is still certain things to be worried about, to be concerned about in the weeks and months ahead. According to the agency, in its latest monthly reports that was published this morning, it said that despite the recovery, which has been on the back of a weaker dollar, we haven't seen the end of our fears yet in the oil market. We get to Dolapo in a minute as he talks to us about what to expect. Just also let you know that OPEC will be meeting on the 20th of this month, and one of the things, of course, the most important things that they will be talking about is the production freeze by member countries. But there are concerns that Iran could pull out from this agreement, and so that could also heighten the risks in the oil markets. We would bring you up to speed on that information and also get Dolapo back as soon as we can. Let's move on now as we look at Hong Kong. Should take advantage of the opportunities brought by the 13th five-year plan to focus on economic growth and people's livelihood improvement. According to the deputies and delegates to the 12th National People's Congress and the 12th Chinese People's Constitutive Political Conference, respectively. And these were issues raised at that meeting. The draft of the five-year plan supports Hong Kong in promoting its role as a center for international finance, navigation and trade. Also is consolidating its position as a global hub for offshore renminbi business development, innovation and science and technology undertakings, and also cultivating emerging industries. The deputies and the delegates agree that the Hong Kong citizens should seize the opportunity and make real efforts.
Hong Kong should take advantage of the opportunities brought by the 13th five-year plan to focus on economic growth and people's livelihood improvement. That's according to the deputies and delegates to the 12th National People's Congress and 12th Chinese People's Consultative Political Conference, respectively.
We are concerned over these new situations in Hong Kong, especially the riots that erupted in Mong Kong during the Chinese New Year. We strongly condemn the increasingly violent activities with terror tendency by radical separatists. We believe that the rioters are only a very small number of people, and the majority of the Hong Kong citizens hope for a peaceful and stable Hong Kong. We must try our best to divert Hong Kong people's attention back to developing the economy and improving the people's livelihood.
The draft of the 13th five-year plan supports Hong Kong in promoting its role as a center for international finance, navigation and trade, consolidating its position as a global hub for offshore renminbi business, developing innovation and sci-tech undertakings, and cultivating emerging industries. The deputies and delegates agree that the Hong Kong citizens should seize the opportunities and make real efforts.
Supporting Hong Kong as a renminbi offshore center can enable Hong Kong to maintain and consolidate its position as a financial center. Currently, some small and medium-sized enterprises in Hong Kong have met with some difficulties, and some youths are at a loss in finding jobs. And the central government has launched policies to help small and micro enterprises and youths to start businesses in the Chinese mainland. This has greatly solved the problems in Hong Kong and offered a way out for the Hong Kong citizens. As for us in Hong Kong, we must enhance our sense of belonging and national identity.
We're now being joined by the head of energy research at EcoBank Group, Dolapo, and he's back with us to talk about the latest reports from the International Energy Agency on oil prices. Good afternoon, Dolapo.
Good afternoon, Bolaji.
Welcome to the program. Now, I was asking you earlier on if you agree that with the IEA that oil prices have actually reached the lowest levels.
I mean, it's possible. It's possible. You know, it's a bit difficult to always call the market bottom, and I'll tell you why. One of the major reasons why there might still be some hesitation to call the market bottom now is the fact that even if you look at what's happening in OPEC, not everybody has agreed to the output freeze yet. And a key person is Iran. And the fact that they haven't agreed to the output freeze means that they still want to grow production. Even Kuwait also hasn't agreed to the output freeze as well. So that's still a bit of an issue, of an iffy factor that could make the oil prices still change direction and go down. But will it go as low as 27, 26 like it did before? It might not be like, it might not go. I don't think there's enough pressure in the market to push it down that low.
Okay. Dolapo, if you're still there.
Can you hear me?
I can hear you. Please go on.
Good. I was saying, so there's a likelihood that if Iran and other members of OPEC, such as Kuwait, who have voiced that they will not be party to the freeze, do not eventually succumb to joining that freeze, there's a likelihood that the market could still turn. But on the other side, which is like a counter to this particular development, is that if you look at what has happened in the U.S. production has shed roughly about 400,000 barrels. The rest of OPEC has also shed somewhere in the region of another 300,000 barrels over the last month. And what that essentially means is that whatever new barrels Iran plans to add, for instance, they plan to add an additional 170,000 barrels before the end of this month. Even if they add that, they will only be replacing barrels that have already left the market. So the market will not react too much to that, which is why we're seeing the market sustaining this $40 price currently. So I'd say it's a 50-50 development.
Let's talk about Iran's involvement. In fact, one of the concerns at the moment is that Iran could pull out of the agreement because OPEC is meeting on the 20th of March. What implication would that have if Iran eventually says no to the agreement?
Good. That's what I'm saying. You see, Iran will not really impact the market as much as we had initially thought. Iran had initially said, look, by the time the sanction is lifted, I'll get access to all the dollars I had that was freezed in other banks in Europe and US, and I'll be able to invest in my oil fields, and I'll ramp up production by 500,000 barrels per day and 1 million before the end of the year. But the reality on ground is that if you look at OPEC figures for January and February, Iran has only been able to increase production by about 220,000 barrels per day. And then they have another 170,000 barrels per day coming up before the end of March, which will roughly give them about 390, 400,000 barrels per day. So they haven't really moved as fast as we thought it would happen. So even if they pull out and they decide to add more barrels to the market, it won't significantly impact the market because a lot of barrels have already left the market in the US, in Brazil, and in other parts of OPEC as well.
Pick your brain a little bit more on what the IEA has been saying. It said that, that the worst is not yet over for the markets, despite its position on oil price levels. Do you believe that?
Well, yeah, it's possible that there's still, I mean, we're still expecting a lot more barrels out of several countries. Don't forget, right next to us here, Ghana is planning to bring the 10 fields on stream. That's an additional 40 to 60,000 barrels per day this year and 80,000 next year. And then if you look across Africa again, there's so much production coming on stream in Congo, in Angola, and then on the other side of Africa, in East Africa as well, there's some production that should start this year as well. So there are various barrels coming in from parts of the world. So the second quarter of this year might still see some, reversal in terms of direction of prices. But what we need, which is why this OPEC meeting might be critical, if OPEC doesn't take that decision to actually freeze output and to some extent cut output, this price recovery we have seen in the last few days to a week will likely revert and go back down. But will it be as low as 26, 27? I don't think so, which is why IEA might be calling the market bottom.
Prices have actually recovered on the back of a weaker dollar. And how long would this price recovery last? Do you think that we'll continue to see an increase in prices?
I think, from a fundamental perspective, because demand supply hasn't really balanced yet, it's a weak recovery, so it probably won't last long, maybe at most a couple of weeks more. But by March, it will likely turn back again. Don't forget again, by March, April, refinery maintenance begins in parts of the world, Europe, and also in Asia as well. So once we enter that refinery maintenance season, we start to see demand drop a bit more, and that typically happens March, April. So that might be another reason that may turn things around in the next few weeks.
Much, Dolapo, that'll be all we'll take from you. We appreciate your time with us. Dolapo Unide, Head of Energy Research at EcoBank Group. Now, the Reserve Bank of New Zealand has cut its lending rates for the 5th time since June last year to a record low of 2.25%. The bank said that the 25 basis point cut was due to global growth worries and weaker demand from China, which is an important trade partner to the country. Now, New Zealand is the world's largest dairy exporter, but the sector has been facing some challenges. The central bank signaled it could cut rates further to help boost growth. The New Zealand dollar fell on the news by more than 1%. The central bank last cut rates in December from 2.75% to 2.5%, saying the country's economy had softened in 2015. At the time, Central Bank Governor Graham Wheeler said it was positive about the outlook for inflation and economic growth for 2016. And a series of economic policies, including a new foreign exchange system, will be implemented in Venezuela. According to the Vice President, Miguel Perez Abad, that's the Vice President for a Productive Economy, introduced the concept of new economic policies, which includes 14 industrial plans promoting economically production outfits, which was actually raised by President Nicolas Maduro earlier. Now, with the oil price staying low, it's a good time for Venezuela to strengthen domestic investment and realize the economic transition.
Venezuela expects to sell between $5.5 and $7 billion this year via a new floating foreign exchange system known as DICOM. According to the Vice President for Economy, Miguel Perez, in its new dual currency control system, the government still plans, however, to sell most dollars at the preferential rate of 10 bolivars, as opposed to DICOM, which is to open at around 206 bolivars. The foreign exchange system will also involve the sale of bonds, he added, without giving more details. Critics have for years complained that exchange controls leave businesses struggling to obtain hard currency for imports and have fueled corruption by allowing the well-connected to buy dollars on the cheap and resell them for a large profit. With a heavy debt payment schedule this year, Venezuela has made a proposal to China to improve the terms of an oil for financing, according to Perez. Venezuela paid off its $1.5 billion 2016 sovereign bond that matured in February, but state oil company PDVSA still faces heavy payments later this year. Authorities are seeking ways to improve the situation, but are not considering a bond to restructure. He also said they were not talking about restructuring.
Okay, we'll go on a break And when we come back, we will take you to the FMDQ OTC Securities Exchange. We'll be right back.